What would the advice be to retail investors from this Samvat to next?
Well, I think the last couple of years, Sonia, have been a little disappointing because the year which preceded it was actually a rocket of a year. The 2013-14 pre-election period, the market did so well, and after that for 2 years, the returns have been quite average. But if you look at the amount of money which has come in from the domestic fraternity, if you take it from the Diwali of 2014 to Diwali of 2016, if I'm not mistaken, I think domestic investors through mutual funds have put in about 72,000 crores into the market. I mean, that's $10 billion plus. So I think there's a serious amount of commitment which has happened from the local fraternity into the equity market, more in the year gone by than in the current year that we are discussing. I would suggest that having put in this money and having not probably got the kind of returns that people were expecting, particularly after the election result, which preceded the kind of rally that we are talking about, I think it's time to probably stay the course, because at this point, having been so patient and having gone average lackluster returns from equity, at least from the index or from many mutual funds, you just don't want to walk away probably before the tide is turning in terms of earnings. So I don't know what's going to happen in the next 3 months. Maybe there is a global accident, maybe we have a correction, and I would suggest that that could be a buying opportunity. And then 2017 and 2018, hopefully you hunker down and you cash in on the patience that you've shown in 2015 and 16. That would be my submission, that this is not the time to get out. And if you do get a meaningful correction in the last quarter of this year, you probably add to positions and then you reap the rewards in 2017 and 2018. So I think one should probably approach the market with a sense of opportunity or capitalizing on opportunity over the next 3 months rather than despairing and probably trying to cut positions in case there is a deeper correction in the market which cannot be ruled out for any global reason.
So is that the view you got from some of the market veterans you spoke to recently, like Rakesh Jhunjhunwala as well?
Rakesh is a perpetual bull, and I would be too if I had 10,000 crores running in my portfolio, right? I mean, he has to be optimistic given the kind of commitment that he has to the market. So, you cannot have that big an exposure and say, I think things are going wrong. And I'm not suggesting for a second that it's only because of his vested interest that he's optimistic, but you would expect him to be optimistic at almost any point in time, except from a trading perspective, maybe 3-4 months or 6 months, you take a dim view. But generally, you would have to be optimistic, right, with that bigger portfolio. But that's not the point. I think 2017, I think the next 1 year since we are discussing that, I think the most important question is, in my eyes, are twin. One, will we finally get the acceleration in the earnings recovery, which we have been talking about, and our voices have gone hoarse talking about it, but it's still not materialized. We are seeing a very, very protracted and slow and sluggish economic recovery in India, whichever data point you look at, earnings included. Now, will the next 12 months be finally the turning point of that earnings acceleration that we have all been hoping for and have not had yet? B, and very importantly, I think the next 12 months are very critical with two important global dynamics, which are short-term and medium-term. I think the short-term dynamic is that globally people will have to adjust with a higher cost of capital. And that's something which is a change after 3 or 4, or actually 4 or 5 years of a very, very low cost of capital globally. That is slowly beginning to change around, and that adjustment will need to be made. That's a very important short-term adjustment which markets have to make. And the medium-term adjustment is whether for some reason the US slips into a recession kind of mode. It's not a base case scenario for anybody, but I think there are some things which are floating in the wind which suggest that you could have something like that in 2017. Now that is an outlier, it's a risk, and if that happens, then one would have to moderate one's expectations from the equity market. But otherwise, the whole game of the next 12 months is between an earnings acceleration in India versus an adjustment to the global cost of capital going up, and I think the give and take between the two will determine what kind of returns shareholders make between this Diwali and next Diwali.
Okay, Udayan, thanks a lot for your time, and once again, have a happy Diwali and a good Samvat 2073. Thanks for joining us. So that's our own Udayan Mukherjee. Let's talk about the market opening. It's a normal procedure. You have a good opening. That's an auspicious, the auspicious trade that you take on Diwali day. A lot of people believe that on this day you buy just one share of your favorite stock, but you do that on the buy side, and that's where the start is always in the green, and that's what's happened. Let's talk about some of the stocks then. Lupin, Tech Mahindra, Bharti Airtel, Idea Cellular are some of the stocks which have opened on the way up, and Dr. Reddy's, Reliance and Tata Motors on the way down, Sonia.
Oh yes, even in the broader markets, you are seeing a lot of action. As you rightly pointed out, a lot of non-index large caps are seeing money being put in for that token trade. RBL Bank is up almost about 3% odd, a stock that has picked up lately. Syntex Industries, Manappuram Finance, Ashok Leyland, these are all non-index large caps, right, that have been making money for investors. IDFC Bank, Federal Bank. I see Atul nodding his head vigorously. Atul, I think you made a lot of money in cards, no? In the last couple of days, you're buying a lot of stocks.
You won't believe, I haven't played cards all of this season. I went for a movie yesterday. So it's been a shockingly no card year.
Okay, so you're still buying in this market?
Well, I think I really don't do it on a day-to-day basis, but I still am invested.
More importantly, do you see India outperforming this year, Atul?
I think that's a very important point, Anuj. The big theme, I think, for the year, if you ask me one single thing, is the outperformance of the emerging markets vis-a-vis the developed markets. We've expressed a lot of concerns over the developed markets, but when I look at charts, if you look at a comparative performance of the EM versus developed markets, you will notice that the EMs have had a 5 to 6 year downtrend from 2010, 2011, and a big underperformance. It's almost a downward sloping, and this trend has broken out. I feel that this is going to lead to a big outperformance in the EM space. You're already seeing it in the last 3 to 6 months, the way Brazil, Argentina, Russia, of course, that's more commodity-driven, have outperformed.
Yes.
But when I look at the MSCI Emerging Market Index, I still think there's a 15 to 16% move we could see. India is a very important subset. A lot of flows depend on that. Assuming domestic investors continue with the SIP route, I think the big silver lining in all this global doom and whatever issues that we expressed is this whole thing of outperformance of the emerging market basket. I think that may be the biggest theme for the year on a macro space, and I am very optimistic about that.
Okay, on that optimistic note, Atul Suri, thank you as always for being with us, and you have a great Samvat 2073.
Same to all of you. Have a great, prosperous, successful year.
Thank you. Well, the market has opened. It opened in the green and it's trading absolutely flat now. The mid-cap index, though, is up almost about 0.5%. And if you're looking at individual stocks, then it is names like Lupin, Tech Mahindra, Idea Cellular and Bharti Airtel that are doing quite well this evening, up almost about 1 to 2 odd %. ONGC, Aurobindo Pharma are also not doing too badly. So on that note, let's do one thing. Let's take a short break. But when we come back on the other side, we're going to be joined by another expert, Sameer Arora of Helios Capital will be with us, and we'll have our usual technical market walas also joining us in moments from now. Stay tuned.